delighted to be joined by Dr. Patrick Trutwein. He's CEO and member of the board of the IKB. It's the German Industrial Bank. Patrick, I would like to give you a little bit of space as well. Because probably you are more optimistic because you have your hands on the ground. You talk to German Mittelstand companies. So, how is that productivity growth, innovation growth? How is it going?
Yeah, look, as we discussed earlier, there are various scenarios how the future could look like, the good, the bad, and the ugly. But let me be an optimist here. I would say there are a couple of certainties we have now that we didn't have 3 months ago. So, one example is 1 trillion fiscal stimulus package, 500 million for infrastructure and 500 million for defense. And I think if we get it right, and it kind of echoes from the past, the 2000s, when Germany was the sick man of Europe, people claimed. We had structural reforms, so there are very high hopes now on the new government. And we have an economy that's pretty robust and can build on its own, I always come back to this, productivity and competencies in innovation. And in the end, this will also help to boost growth, not only by exports. Yes, China and other countries have upgraded. It's a different ballgame, but look, we are pretty strong in innovation. I think we can compete. And at the same time, there is some hope we learned yesterday from domestic demand. So that's why, if you ask me, look, I'm a risk officer.
You're so optimistic.
I'm allowed to be optimistic.
We still have that, like the global champions or hidden champions, as we've been very proud of that for many years in Germany, but still we are seeing 2 years of stagnation or negative growth, most likely another year of stagnation. I think more than 300 billion euro left. Just left. So why do they not invest in Germany?
I would slightly rephrase this question, because what I'm seeing is that there's a strong demand for investment in Germany, and Germany is still leading in a lot of fields of innovation. We heard it yesterday, especially if we're talking about green tech, if we're talking about investments going into infrastructure. And this is actually where we come in and say, look, there is an investment opportunity that will fit your ROE targets, and we can provide public program loans. This is something that you do not have in the US, and to that extent. There is the Inflation Reduction Act, which gives you tax credits and all these things. But basically, if you look at public program loan that you have in Germany, where you get public grants, or you have low or stable interest rates for some time, or you have risk participation. This is something that will help these companies, the German Mittelstand, but also sponsors and project finance companies, to make viable investments here. So from what I'm seeing is there's great opportunity, and if you look at the fiscal stimulus package we're having right now, this will also help to that effect.
Patrick, let me ask you as well and bring you in that debate, because clearly, German companies also have invested a lot of money abroad. So do you see a refocusing on the continent?
I think so. You mentioned the wake-up call that has happened, and obviously uncertainty and the lack of reliability abroad is an issue, or is an emerging issue, you could say. And Germany still stands for stability. And this is one thing to factor in. I think we are not that good in Germany to emphasize the strengths. The dual education system and certain other things, stability of law, that are actually quite enticing. But I'd like to come back to your point earlier, because I really like that you also put an emphasis on the mindset. Because this is quite important, and to bring in the theme of the transatlantic panel again. It's not only anecdotal evidence, but what I learned from working in the US is that there is a higher degree of individual ownership. Also taking ownership for applying new technologies, and embracing productivity potential with new technologies. So and this is something where we as entrepreneurs or business owners or business executives can also help foster this mindset change on an individual level by enablement. Yeah, for example, IKB Bank doesn't dispose of Silicon Valley tech budgets, but we said, no, let's not just stick to bringing in a coach and having some prompting training sessions, because basically what happens, people are very entertained. They're entertained for 1 or 2 days, and afterwards the average employee has an adoption rate of 0. So you have to take it one step further. You have to bring in trainers that train the trainer, that are actually versed in applying Gen AI or large language models or whatever artificial intelligence tool you use, and then bring that into the company. And then you can take it even one step further and tell your employees, look, we will pay for your licenses for your personal use of ChatGPT or other Gemini or other models, you name it, because we think there will be reciprocity. So people using Gen AI in their spare time will also make them use it at work. So that's kind of things how we can work on changing the mindset and also changing our working routines and how we look at things and how we look at new technologies.
There is one very clear overriding theme. I will put it this way: productivity is the strategic imperative. Investing in innovation is the strategic imperative. And let me break this down for you from a macroeconomic perspective and from a business perspective. If you look at the sentiment of the last 3 to 4 years, the overriding themes, the dominant themes are still uncertainty, complexity, coming with high volatility in financial markets, as we have witnessed recently. But we have clarity on some themes that we didn't have 3 months ago. First of all, there's a 1 trillion fiscal stimulus package. But we have to note that upon announcement, bond yields, 10-year bond yields, spiked by 50 basis points. So there was also a risk of inflation embedded in there. Secondly, we've been talking about global decoupling and global de-risking. Well, this will come at a cost. We will break up supply chains and it will have effect on economies of scale in certain production locations. And thirdly, there's the lingering topic of demographics. There is a demographics dilemma. We have a transfer-based pension system and a dwindling, aging, skilled labor force. So if you look at these 3 components, there's almost a 101 textbook answer. And it is, we have to counter these detrimental effects and these risks to inflation with productivity. And if we are not willing to work longer in life or longer hours, well, then we have to improve our output by the hour. And this is the mere definition of productivity. So this is the macroeconomic, let me put it this way, predicament where we need productivity. But if I also add a business angle from chairing our bank's credit committee twice a week. And as you know, IKB Bank is committing substantial amounts of its balance sheet to investments in transformation and innovation in Germany. If you look at the highly rated companies and the companies that are highly rated over time, they have been constantly investing in innovation, constantly improving their processes, reducing energy input, reducing material input, being faster, inventing products that their customers haven't even thought about they might need. And this is also something about innovation and pushing the productivity agenda on a corporate level. I think there is a great atmosphere this year, and you kind of feel that there is a pragmatic sense of renewal. So that's almost the spirit, the true spirit of Ludwig-Erhard. And we touched on all these topics. It's not only about making bold moves and being courageous, it's also about changing people's mindset. So I think we're at a phase now where we're at a strong clarity in crisis. You could also say we've been lamenting a lot, but let's say we did a German style and we addressed all issues. And I think now there is the right impetus to address all the issues that we're facing and solve them.